Hello, everybody. Hope you're doing well today. Today is Tuesday, March 12th, 2024. I'm joined by my trusty sidekick, Matt. Matt, how you doing? Still can't hear you, Matt. Still can't hear you. While we're fixing that, let me show you something real quick. We'll be right back. And we're back. Hope everybody's doing well today. Matt, can you hear me? I cannot hear you, but that's all right. That's all right. Hope all is well. As always, you can, wherever you're listening today, you can put it in the old chat and we will see it. We'll be sharing things through there. For those who are the first time joining us, this is the year to date show where we look through what's working year to date. Pretty straightforward. One of the more popular Option Omega things is at the end of the year, we'll always run a bunch of tests and see what worked year to date. And someone had the idea of saying, why don't we do that every week? And said, let's do it. So that's what we do. I was on vacation last week, went to Key West with my wife. That's why you can see it's extra glary. That's just a mix of baldingness and burn and balding. Anywho, hope you guys are doing well. Let's jump straight in today and we'll look at some trades. So I'm going to show this here. First off, I want to make sure everybody can hear me. Can someone post in wherever chat you're listening that you can hear me and that it's going okay? As we go through it, I like to make sure that people can see the things that we're doing, talking through them. Happy accidents, things like that. Thank you, Joe. Okay, so we go. I'm going to start backwards. We're going to do it a little different this week. So because we skipped a week and we didn't start January 1st, don't pay any attention to week 4 or week 5. I just use that to say what's the week we're in. So last time was week 4, and today's week 5. So we're going to go through and we're going to see how some of these tests have done. So this is week 4. If you remember, this is selling a Condor on a low touch. And pretty straightforward. Oh, I think I hear Matt. Can you hear me?
You.
I
I
can
had to
hear
go
you.
mobile. Can you hear me?
I love it.
Yes.
Everybody welcome Matt to the program. He's
Hey,
here.
I can hear you too.
Perfect. So I'm going to share this. This is last week, or the last week we did it. Sell Condor in a low touch. So basically, it's an opening range breakout to the low side, and at 10:30, anytime after 10:30, if we break below the low, we're going to sell a 50 delta put spread, basically 25 points wide, and we're going to sell the 25 delta call spread 25 points wide. Stop loss 25%, trailing stop after 10%. So this is a Condor, right? That you're not exactly neutral going into it. You've got positive deltas because on the touch you're selling closer to the money. So you're kind of playing a reversion, right? Yeah, that's how that's working. And as you can see, last week it had done quite well with the old 23,000% MAR. I will put this in here real quick so you can see it. And then let's see how it is done in week 5. So, wow. So as you can see, the MAR ratio has gotten down to earth again. All right, I'm going to share this for you. So what does that mean? What does that tell you? Right? Like what is that a signifier in the market that so far the first couple of months of the year, you could anytime the low of the day, basically from 10:30 low of the day was hit, you could sell an at the money Condor. What does it mean now that still a winning trade, but not a 14,000% trade? What is that telling us about that type of perhaps where the market is now? Any takers? Matt, feel free to jump in yourself.
Yeah, I mean, I would have two comments on this. Three comments. First of all, thank you for everybody who's sending in back tests. Second of all, if you run this with intermittent stops, which is how I would run it, it goes from green to red. So, and I'd probably run it with more slippage than it has. I would put more exit slippage or more stop loss slippage on it. But to answer your question, I think what it's saying is with a lot of these Condor trades, they are subject to the market mean reverting in its macro movements themselves. So what I mean by that is this is a skewed trade and it worked for a while as the market was doing one thing, and now the market's not doing that thing and it's not working as well.
Yeah, that's it. And while we're talking about that, Matt, could you tell them a little bit about how options involve risks?
Yeah, options involve risk. They are not suitable for all investors. This stream and everything from Option Omega is not financial advice. It should be considered information and or entertainment. Are you not entertained? And backtesting by its nature, and this is a perfect time to say this because backtesting by its nature is backward looking. It's not forward looking. So when you see a test like that, that's a good example of how a test may have worked forever. It may not work in the future. And that's actually a theme. We've had a lot of discussions on the Discord about, we're coming up on 2 years in May of having 7-day a week, or 5-day a week, 0-day options in SPX. So it was in May of 2022 that SPX was available for 0-day options every day. And in that time, we've had a grind down punctuated by sharp move downs market. We've had sharp moves up. We've had kangaroo markets. We've had chop. We've had a lot of different market types. And even within that, this past week on the Discord, there was some really interesting discussion that tests that have worked for, of those 20 or so months, tests that worked for the first 15 or 16 months are suddenly not working anymore. And even though they worked in multiple different markets, the market we're in is not one of them. And it's been super interesting. So as a reminder, if you're not in the Discord, Option Omega Discord, it's free to join. However, the benefit of the Discord is really the verified channels, and the verified channels just require a backtesting sub that's active. It's super easy. If you need the link, go to optionomega.com, click on the Discord item at the top. Commercial over.
Love it. Thank you. Next trade, I'm going to put it in there. I think I already did put it in there. No, did I put it in there? This is my favorite thing every week where I just send you the same trades over and over again.
Speaking of the Discord, I'll post these links in the Discord so everybody can see them.
Perfect. So this is a calendarized iron fly. What does that mean? A calendarized iron fly. So for those new to options, an iron fly is when you're selling the put and the call at the money, and you're buying wings, so they say, to the out. You calendarize it by the wings being longer dated than the shorts. And so in this case, this is a 0-day shorts and 1-day longs. And you're doing it on a gap down day. So anytime there's a gap down of a minimum of anything, basically, you put it. This is a full port trade. We would never do this in real life. This is just for testing purposes, how it would work. and we have some entry and exit slippage and things like that. It's pretty straightforward because we're not taking a profit target. We're not taking a stop loss. It's just kind of a set it and forget it in some ways. And as you can tell, week 4, at least by week 4, we had done quite well with a 20,000 MAR ratio. Let's see how we have done in week 5. Actually, strangely enough, you do expect, or I think you should, if you don't, you should expect MAR ratios to not be 20,000 over a large data set. You're probably not here right now if you have a MAR ratio above 20,000 over a large data set. You're probably not listening to me.
No, probably not.
No. So you're probably in the computer, but that's a separate thing. At that, or whatever rich people do, they're in their yachts. But the 5,000, 5,100 MAR ratio is nothing to laugh at. And then you think, well, that's a huge drawdown, 76%. Well, that's the point of it. That's why the MAR can tell you a lot of stuff. I mean, the MAR basically is telling you how good is the test compared to the drawdown. So even with a large drawdown, it seems to be, working well. Again, the data set is 17 trades. I don't trust that at all. What's interesting, though, is you can take this and run this back.
Yes, you can.
And it actually, what's up, Gregory Rubio? I love that. You can, I think this one actually does pretty well. But, options involve risk. They're not suitable for all investors. So that's a calendarized fly. Right?
Yeah.
Go ahead.
While we're on the subject of MAR, and just, we say this, I think, almost every cigar lounge, but it's full. The tests are full ported to compare with each other because that's how the first test that we did was set up. So we're matching that so you can easily compare those. The other value of a full ported test, in addition to comparing it to other full ported tests, the other value, as Troy pointed out, you can see the drawdown. Like, you can really feel the drawdown. And shout out to our Discord. I think it was Wizzy who way back years ago, it's been years now, not to feel old, talked about that being one of the values of a full ported test, is to show what the drawdown is. Because it's one thing to look, like if I run that same test at we'll say a 5% allocation, and I run it over the last year, okay, it has a 0.2 MAR, 4% capture rate, 5.6 CAGR. Nothing really to write home about. Still positive expectancy. I think if Troy and I spent a couple minutes dialing it in as far as days of the week, we could probably do better. My point is that when you look at that test and you think, the test I'm looking at right now, 23.5% drawdown, that doesn't seem that crazy. It may get your attention if you have a 90% drawdown or an 80% drawdown on a full ported test like the other one. So just something to keep in mind when you're looking at allocations. Again, MAR is just a ratio in and of itself. So MAR is going to be a function of a couple different inputs, and one of them is obviously the percent allocation that you're doing. So
dropping knowledge, dropping wisdom nuggets, straight baller. Yeah, and to that point about how MAR, even like some of these, they were like 20,000 MAR, and then the next week it's like 3 MAR. This is the thing that I've said. I'll say this every show that we do, year to date show. The data is just not there yet. I mean, I'm running tests year to date, and so you're trying to see as close as you can in real time what's working. It's always much easier to see what's worked in a larger past tense. Like by December, we'll have a really clear view of what worked this year. The problem is, in real life, there's the balancing act with testing, and that's why the subscription matters, because when you're testing kind of month to month, most of the year-to-date stuff from last year, when we did it in December, we showed in January that it's just massive drawdowns because the market's changing. And
which begs the question for the chat. How do you know when the market conditions have changed and a back test is no longer a good trade? What are some of the things that you look for, and what are the signs or the metrics maybe that you should move on from a certain back test, and how to move on? Does anybody have any thoughts on that? Troy, do you have any thoughts on that?
I mean, I treat my back test like I treat my previous girlfriends. You just ghost them.
There you go. I have to say that last fall, one of the changes that I started making as well was being more quick to cut a losing back test. And the one that I did it with was there was a period in time when there was a lot of mean reversion the first couple of days of the week. And so like an at the money trade to where you were basically banking on the market by Tuesday kind of being pretty close to where it was at the end of the day on Friday by Tuesday morning. Those trades were very popular. I think last year, if I remember right, Troy, there was a double calendar, like a 50 delta calendar for Tuesday morning, whatnot. I had a similar trade, and it had not lost much. And then I think it lost 2 or 3 times in a row, cut it off. And what I found personally is that I have stayed in losing trades too long, and I rarely cut them too soon. So that's just my personal way of approaching it. But that's why it's helpful. Unfortunately, the most common question we get from new people is like once a month, somebody will get on and be like, hey, can you guys share me, not to ask for too much, but can you share me your evergreen strategy that just works all the time? And it's like, well, that's tough. Well, it's tough to find. There are trades that work in multiple environments, but
if we do have them.
Yeah, they're out there. They're out there.
Yeah.
But people who have that stuff aren't just going to share that. And even in a trade that you think is going to work all the time, there's position sizing is a huge deal. When you start and stop, the test is a huge deal. I can't tell you the number of times.
Oh, I think we lost him. I can't wait to hear what he said. Oh, the mystery is good. If he hops back on, we'll let him finish. I can't wait to hear what he says. I'm excited about it. Those are all, you guys gave great answers, especially the robust tests, committing 20 to them. That's a great one. Share them with others as amazing strategies is awesome. Write songs about them. I listen to a lot of Creed when I'm looking at old tests, and I drink a lot of Gatorade and stuff. Matt, you were saying you got cut off. What were you saying?
Sorry,
straight back to it. Okay. Well, if Matt comes back, we'll do it. So let's go on. Let's move on. If you look at this one, this is a call butterfly and a put calendar. Now, if you know in Option Omega land, we have been known through the years as like calendar guys, because we are largely calendar guys. We love calendars. It's been, last year was not as good as the year before for calendars, for particular short-term ones. But this is an interesting idea, and I don't remember exactly who, maybe Wizzy and I have talked about this before. This notion of a put calendar to the downside and a butterfly to the upside has always been super intriguing to me. And so I really like this one. And basically what this is it's a mix of a 1-2 day put calendar and a 1 day call butterfly calendar. Matt, you got to finish your story. I'm very intrigued what you were saying.
I'm probably going to drop internet again. I don't even remember what I was saying, so I'll just let you talk. Sorry.
Okay, great. So anyway, you're doing those two things, and again, the entry is pretty straightforward. I mean, you're just trading it at the end of the day, basically. And so this one really is kind of one of those, again, set it and forget it trades. Very small data set. But the call butterflies, you can see it's a 25 delta, and you are selling 25 points beyond that, and then buying 50 points beyond that one. So pretty straightforward. And you're kind of setting it and forgetting it, which is it was super intriguing to me. And so let me share this real quick with you. But let's see how it is done year to date. So it does not have a $20,000 win rate. But this is the point of this stuff. It's gonna always seem like a downer because like it's not 20,000, but that's still a pretty good trade in 3 months, right? I mean, I think most people, yeah, Tony, that's a great. We put 8 up to 8, but we know that four is the standard. The way to kind of this is really just to model in a clearer way what you're doing. But you could do this in portfolio just as well, where you just say like, I have a put calendar, and what you do is you set up these orders, and you try to get filled as close as you can. I mean, it doesn't necessarily have to be, and you could test in real time how much slippage you do because of that. But yeah, it's pretty straightforward. But you're right. It's when you look at this, it's like, so I can't do this with my brokerage. I don't know really anybody that can do this with their brokerage. But anyway, so this is pretty interesting. Now, I want to show one adjustment with this that I thought was interesting. Notice the 30 MAR ratio. There's one adjustment you can make that kind of improves the ratio a little bit. And that ratio, it's one addition. And the addition is you're exiting the trade at 10 the next morning, basically. And so you're putting it on at 3:54, and the next day you're just getting out first thing in the morning. Now, why would you do that? Why would you be inclined to get out of a trade like this? That's you're putting it on at the end of the day, and it's almost you're treating it like just a put it on, take it off first thing in the morning type of trade. Any takers on why that would be? That might cut down on drawdown. At the end of the day, I mean, the reason is this is a decaying trade, right? I mean, by 10:10, it's a 0-day trade. You've got a couple hours left. But if you haven't done anything, it's just going to bleed. And so you're giving up a little bit of profit potential for that, but you're also cutting down on that decay drawdown. And so that one adjustment is interesting. You could take this and play with it. That was a very quick adjustment I did. There's some other ones you could probably do as well. Like I said, haven't even played around with stop losses or taking profit in this specific test. So you could do that as well. Matt, what do you think about any of that stuff?
I was moving my computer, so I didn't pay good enough attention. But
no, you're fine.
I like the setup of a butterfly on the upside and a put calendar on the downside. I haven't played around a ton I haven't played around with this test at all. But in general, I like that setup. I've started doing that for a little more. If I have to scratch the discretionary itch, I've started doing that, of doing a broken wing or even a straight fly to the upside, and put calendars are nice to the downside as well.
Nice. Okay, a couple more. We're going to call it a day. So, let me do this real quick. All right. The week 4 call butterfly. What is this? Basically a 0-day trade. It's using the opening range breakout. All right. And the range is between 9:30 and 10:30. And then any time between 10:45 and 1, if we break out of that first hour range to the high side, we're going to buy a call butterfly. And you're buying the 50 delta. This is aggressive. You're buying the 50 delta. You're selling 2 40 points beyond that, and then 1 80 points beyond that. Now that 80 points is probably most likely going to be just for margin. I mean, that's really not giving you any protection. from a Greek standpoint. So it's really just to limit your margin, and you just kind of set it and forget it. Again, these are pretty simple ones. The way I look at it is later in the year, as we keep going, we can keep refining these and finding things that work. But for right now, these are kind of set it and forget it. And so 2,000 MAR on 17 trades. Let's look now at what week 5 brought us.
Yeah, I love this one. The Orbo is super interesting because when we put that feature in, we had been asked for it a few different times. And the people that use it have found some fantastic back tests. And then I think a lot of people don't even know it's in the back tester. So I love it. I like this structure as well because basically, like you said to the Greek discussion on the longer leg, I mean, really, you're just getting a slightly discounted call. And I mean, certainly you could have a range breakout that was more than 40 points, but unless your breakout is more than 40 points, the butterfly it's a discount to the call, just to buying a straight call for, I don't know, 20% more or 10% more, 15% more, something like that.
It actually gives you even more than that too. So let me
hit us.
Let me do this real quick. So you look at this and you look at the trade log and you say, okay, you're selling a 25%, or you're selling 2 of a 25-cent credit and you're buying a $935 call. Like, why are you wasting your time with this 25 cent credit, 50 cents of credit and 5 debit? Why don't you it's all in the debit to the 50 delta, right? So let's run this real quick. We're at a 94 MAR. Still does great, right? So why would you do that?
Wow.
Why would you do that? Well, here's the answer. Here's why you would do that. When you're buying a butterfly, or actually when you're buying a call, are you buying vol? I mean, if you're buying a call or a call spread, you are buying vol, right? And it's obviously skewed differently because puts, but a lot of people don't realize that when you buy a call, you are buying vol. And so as prices rise, what happens to vol? Usually there's a reversion, right? It's usually going to get not crushed, but just going to go down through time. Yep. Well, when you're buying a butterfly, those two shorts are actually making your Vega more neutral, so that as vol goes down, you're not being punished by that. That's why you would trade that butterfly and structure it that way, as opposed to a long call. I wonder who really trades. I know a lot of people who trade this exact type of strategy. So if you're talking about call butterflies in general, I'm not sure what you mean, but a lot of people would be my answer.
I think a lot of people are trading Orbos because it's done extremely well. And speaking of evergreens, I've seen people post Orbos that do well in over a multi-year time period. So they're for sure out there.
Yeah, and even if not, go ahead. Probably why.
I was going to say that's probably why we had one of the first requests we had right after we launched the backtest. Somebody's like, "Can you do an opening range breakout?" We were like, "That's the first thing you're asking for." Is very early on, and it wasn't a bunch of people, but we had it consistently, which is one of the reasons why we did it. Yeah. And this is probably why.
And also, this is why we do the show. I mean, there's just a lot more strategies than, honestly, probably zero-day put selling or condors at this point in life. And so there's a lot of different ways to trade, even short-term stuff. And so we enjoy showing that stuff off. And this is one of those. This is using, this is I was just talking to a friend, an options trader, about this the other day. Why the difference in why buying a call butterfly, that once you understand what that is and what the Greeks are behind that, you then understand how much more powerful options are than futures. Because otherwise, just buy a future. If we want to play a play, just like buy a future, buy MES or ES or whatever. But you're structuring things in weird ways with this, which is cool.
Troy, this actually is interesting. Makes me think of using this with another feature that we just came out with, which is the leg groups. And I wonder, and this is something maybe to inspire some back testing, or if I get some time this week, I'll try it too. I wonder how this type of strat would do, because you had a range breakout earlier. I wonder how a risk reversal would do with some sort of put selling and some sort of fly to the upside, and treating them independently in an Orbo type situation. And that might be interesting. And with the leg groups, you could exit them differently if you wanted to. Might be interesting.
Yeah.
So
yeah, that would be interesting.
Raymond has a question. Does the software have optimization and walk forward capabilities? I'm not sure what walk forward capabilities is. It's for back testing only. It doesn't have you can't look at, it's all yesterday. To answer your question, it's all yesterday's data. So the data is all yesterday. So if you're wanting something to track a live trade, it's always going to be a day behind. Because by far the most popular thing we have is 0-day SPX trading. It just is. So, and does it have optimization? We've been asked about an optimizer a lot due to the complexity of the option chain and the massive amounts of data that we have. An optimizer is just not feasible from a compute standpoint.
Well, I think he's just asking, is it optimized? I mean, it depends on what you ask. Raymond, great question. You can get into the Discord and ask people, rather than, like, we're the owners, so we're going to be pretty biased about what we think from an optimization standpoint. So I would just feel free to just ask someone in Discord. Just jump into the optionmaker.com and click on the Discord link, and you could ask someone, is it optimized? It's pretty fast. So from an optimization standpoint, you can do a lot of work pretty quickly with it. But that's one of the guys that wrote it. So you have to take that with
totally unbiased.
Yeah, totally unbiased for sure. Underlyings available: SPX, SPY, Qs, IWM, Apple, and Tesla. So if you look at the kind of top 10 most liquid symbols on any given day, those are the ones we tried to do first. So let's keep going. Those are great questions. Last two. So this is from two people in the Discord. I'm going to butcher their Discord names, but I thought it was fun to they threw these out here for our enjoyment. So great question, Tony. Opening range breakout. So an option. So it's a common futures thing. Yeah, thank you, here. It's a common future thing, but good job, guys. Yeah, you guys are all helping. I like this. The common futures play, common kind of stock play. You can do it in options too, and we have found that it's a great. I enjoy it a lot, personally speaking. But
yeah.
Okay. So last two. This is from Jacoby. Matt, would you say that's probably true?
I don't know.
Jacoby. Those are the letters. So if Jacoby, you're listening, shout out to Jacoby. This is the test he wanted us.
Thank you.
Wanted us to look at. And what this is, basically, it's a 2-day, and it's got a weird structure. So I'm going to show you in the trade log just so you can see. You're buying a call that's 2-day, that's at the money. So basically the equivalent would be 50 delta. You're selling a call spread. So you're turning that into a call spread. You're selling the call that's $2. So you're buying at the money 2 days out, 50 delta. You're selling a $2 call. Basically, wherever the strike is, that's $2. You're going to sell that. and then you're buying a $2 put. So you have a debit spread, a very heavily weighted debit spread, and you have with a put protection, like it's not really protection, it's just you're adding to it. You have a put. And your exit is at 50% profit target. You close 25% of the trade. At 100%, you close 25 and you set the stop loss to 50. And then at 200, you close the other 25 and set the other stop loss to 50. And it's got a bunch of stuff. The miscellaneous basically is the goal of that is to make it as realistic as possible. So you can have your opening fees and closing fees. You can add slippage. You can cap your profits. You can cap your losses. You can require two hits at the profit target. And so he has done that. And it's an interesting trade, obviously when you see those type of numbers, it's an interesting, I want to run this because it's easy to be like, well, that's real, not real life. So I want to run it with one contract instead. And as you can see, like what that would look like if you just did it once.
Yeah, because it's an expensive setup because you're buying.
Yeah, it's expensive. It's going to cost you about $2,000 at least to do that.
Can you put the link for this one? That is I don't even what would you call this structure? I don't even know.
That's all this is to me in my mind is it's a debit. It's a debit.
Yeah, so it's a debit spread.
It's a call debit spread. And then with a put kicker almost.
Yeah. It's like it feels like it's a mixed drink where it's like one thing with a twist of something else.
Yeah.
Because
so
that
you can
put
see
is pretty far out of the money for a 2-day put,
Yeah. I wonder if the put, you'd have to dig into it. I wonder where the put this year has come in to make the value. Because you're losing a lot, if that call, if the call goes against you, the debit. And so this is the trade, this is the underlying. So that went up. It'd be interesting to find a winner. I'm not going to do it live, but it would be interesting to find a winner where it was the put that got you. I don't think you're going to get 1 year to date. I could be wrong.
Right.
But we just go up every day. Looking at this price, it's ridiculous. But in the long term, it'd be interesting to see. Just to show you the last year of it.
Hey, did we just hit the all-time high? If somebody in our chat tell us, because Troy and I are focused on this. Did we just hit all-time high? Maybe.
Probably.
I got a debit spread on, so hopefully.
I'm gonna take the put. I'm gonna take the put off real quick.
Yeah, I'm looking through the trade log right now to see.
It's about the same to me. Yeah, so you're okay. Perfect. Yeah, it's 11,203,000. The put is not really doing much this year. I understand why you put it in there. It's an interesting trade, but it's not doing much. Now, one variation that a guy named Dan and in the Discord did actually kind of took this and took the put off of it. And so we love variations. Shout out to both of you guys for working on it. But basically, it's kind of the same thing. You get stop loss is a little bit different. He did certain days. Now, for those who don't know Option Omega, that could be like, well, that's cheating, right? You're just picking certain days. Not just people at Option Omega, but there are other kind of entities that have started realizing that perhaps there's seasonality to the market, especially during 0-day now and the advent of 0-day trades. And so people will run tests and say, hey, look, some Fridays don't work for this type of trade, going back 2 years. So it is what it is. We try to be data driven, but it's interesting. So this one's more or less just kind of taking the put off and letting things go. And obviously you can see that it's done, you know.
Yeah, I would put this in the same category as some of these other trades that are like, if you're, and again, shout out to the Discord and this idea of small account challenges. If you're in a market that's doing something consistently, like we're kind of in right now, right? I'm thinking any Orbo strategy today would have been a great strategy. You know, this strategy would have done pretty well today, right?
Yeah.
If you run this back a year, it's not pretty. So what I love about this is just saying, you know, you trade the market you're in, not the market you wish you had. And
yeah.
I'm in other discords. I'm in discords where people get mad at the market all the time. That doesn't help your trading. It doesn't help your trading to get mad at the market. Like, you're not moving the market. Nothing we're doing is controlling the market. So you trade the market you're in, whether or not you like it or not.
Yeah, and I would say, I mean, there's a sprinkle of common sense, you know, with the market. I was meeting with someone the other day, and they told, I can't verify the stat, but they told me basically that the average, how often since 1950 has S&Ps hit all-time highs? Mm-hmm. And they said on average every 14 days, which is, I don't believe that. I still kind of don't believe that. But once they explain the logic of that, that kind of makes sense a little bit. Basically, what we're in right now is like, we push, we breathe. 60-point drawdown, 90-point drawdown, maybe 100-point drawdown, whatever. Push, breathe. And so I think that makes sense. And so we're in a market right now where call debit spreads work. Like, we're just in that market. I don't, personally speaking, I can't read minds at all. I can't even read hearts. I can't really read any part of any person, but my thought is that I really don't think a call debit spread is going to make it in the year-to-date finale in December. That's that. If I was a betting man, which I am, I would not put a call debit spread as a finalist for the year-to-date. If a call debit spread is a finalist for the year-to-date in December, that means the market's going to be like at 14,000 or something crazy. So who knows at this rate? But anyway, that's all I've got, friends. I appreciate it. If you have no idea who we are, check us out, optionomega.com. We basically just a back tester, and we go back to 2013, and we want to try to do a good job to build out confidence when you're trading options. So that's what we're about. As always, you can reach out to us on our Discord. And other than that, we will plan on being back next week, and we will look at the Dan and the Joker Co. and the ORB and all of that stuff, and maybe even some new ones. So that being said,
send us your back tests.
Oh yeah. As you can see, I will put it on. Have a great rest of your day, guys, and we will talk to you soon. Bye.